Welcome. The exciting, the glittering item in the world is gold. Whenever there is any sort of uncertainty, whenever there is any sort of changes, any part of the world, the first security, the first item that reacts is gold. And gold is the major item where every human being, every person in the world watches it with utmost interest. In the last few days or few months, the gold prices have gone up a lot. Everyone are waiting for the gold prices to come down so that they can buy. But the uncertainty is increasing, and the prices of the gold is also increasing with that uncertainty. Any uncertainty, gold is a safe haven. So people put money into gold, and the prices of gold goes up. Without any uncertainty also, we know that the prices of gold go up because that is the general consumed item in the world by everybody. In the last 10 years, the price of gold has given a return of almost 10% compounding. Now in the last few months, this rise has been abnormal. The more uncertainty, the more rise in the price of gold. That is what we are seeing in the gold in the last few months. Now, when gold prices come down, what can be that level so that we can buy? Because in the current prices, it's become expensive for us to think about buying gold or investing in gold. For those who are doing SIP in gold in mutual funds, for them no issue because the cost averaging, the price averaging will take care of the investment so that on a longer term basis they get very good return. Now, whenever the price of gold comes down, it doesn't come down in a gradual manner. Generally, it comes down aggressively many a times whenever there is some sort of announcements or some sort of changes that take place in the economies all over the world. Let us see the chart and see the historical prices so that it gives us some understanding about what can be the best level we can really think about buying gold with confidence. Come, let's see the chart so that it makes some meaning and some logic so that we confidently put money or buy gold for our general purposes or even as an investment. Now, when I see the chart of gold April futures on a weekly chart, MCX, that is multi commodity exchange, where gold, silver, and many other commodities are traded in that particular exchange. So, now if I see this futures price chart, now I see that 80,674 price is very crucial from where it reacted towards 70,600, and from there it went almost all time high, and it's far away from this level currently. But this can be a good trigger point from where crossing that level gold went all time high. Now that when gold corrects this point from where there has been huge reaction, almost if you see 80,674 to 70,000 76,000, this is almost 3,500 rupees per tula, which is a great reaction on the downside, which is almost 4% reaction on the downside. So that point from where really the selling took place in the historical time frame is a major resistance, and that resistance was crossed and made all-time high. So that point always remains as a main critical zone for reaction in future also. So 80,600 level can be a crucial level for us to consider buying gold when gold prices come to this level. Now the point is, we buy gold in spot market, but this is commodity market. So there is a difference in the spot market price and the commodity market price. That's about 2000 rupees in the current scenario. That means 80,500 to 600 plus 2000 can be 82,500. So somewhere around 82,500, 83,000 can be a good level to consider as a demand zone as per the historical charts what we see in this particular chart. Now the next best level is definitely 76,000. Very crucial level. Now if you see the previous record, from 76,000 it corrected, again from 76,000 corrected huge, and from where it crossed this 76,000 zone and made a big move of almost 5% and then reacted 4% and then crossed and went to all-time high. This is a clear indication that major breakout point for gold before it made all-time high has been 76,100 zone. So 76,000, 76,100, if we add 2,000 rupees for the spot gold, it will come with somewhere around 78,000. So 78,000 is definitely a best level because the previous high will definitely act as a support. If a resistance is crossed confirmly with the confidence and with volume and clarity, that particular 78,000 in the spot gold will become a support where demand will definitely come in all probability. So next time when gold prices come down to 78,000, as a trader, you can see that 78,000 on spot gold price can be a good level to consider taking a trading bet. For a spot gold, 78,000 is important. For MCX, 76,000, 76,100 is a very crucial zone to consider buying gold from a trading perspective, even from an investment perspective, and even for your requirement perspective. Whenever gold comes towards 76,000, 76,100 on the MCX level and on the spot market, it is 78,000 level, you will find a great opportunity to buy. That is what the historical chart indicates. So multi-reaction zones which have been acting as a resistance, once they cross, act as a major support for that particular security, which in this chart, in the gold chart, indicates that MCX level of 76,000, 76,100, spot level 78,000, 78,100 is going to be a crucial level for gold. But however, the next best level is around 80,600 on MCX. So 82,000, 82,500 on spot gold is definitely important. So for spot gold investors, let me give you briefly what best levels. 78,000, 80,000 is a psychological level, and 76,000 is a major resistance zone which will act as a support, and the next best support is 82,000, 82,500 zone. That means whenever any levels from 82,000, 82,500, 80,000, 78,000, all these three levels, and the 78,000 is definitely a very crucial level at where gold reaction can be huge from 78,000 in case it comes and touches that level, because it was a major resistance, has given a major breakout, so it will act as a major support. So keep in mind 78,000, 80,000, 82,000 in the spot gold are crucial levels for gold, 78,000 being major support for gold, where high probability of huge reaction is possible at that particular thing. That is what the chart is indicating. So I am not a SEBI analyst, so please study carefully all the details, take the advice of your financial advisor and make your investment. But the current chart indications are very clearly explaining that these are the good levels. But however, please do your own research and take an informed decision and be profitable. Thank you.